Hi guys, this is Kelvin. Today is Saturday, weekend, and I feel like I want to backtest or probably try to apply the concept of precision support resistance to analyze one or two synthetic pairs on derive. So, what is this precision support? Precision support um, concept. Great. So, according to how I have defined this concept, generally we have our basic or normal support resistance concept, which we've been taught as a zone on the chart. Um, and out of or inside of this zone, support resistance zones, which is the one of the basic concepts in trading or forex or technical analysis, I've observed and come up with this specific price or um, closely or close price says that that of which um, the within the general support resistance price could frame or price could have power to buy or sell around that. So I've defined it as any dynamic price or zone that draws price to itself, and also price distributes off from that particular precision price. And then there is the power of buying, which is support, and the power of selling, which is resistance of that same price. This price also can act as both support and resistance, but the edge here is that um, when we are monitoring precision support resistance, we want to see one side get weak. Like for example, when we see the support get weak so that we can leverage on it and then we can use it as resistance. And we want to see a resistance also get weak and we can leverage on it and use it as support. So what makes precision support and resistance line or price powerful is that it is both used as support and resistance. So within support resistance or key levels within that zone, that's where I frame or find this particular price or line. Um, at this price, what is the requirement? So it is required that we see or we have an indication. And what is indication? Indication is typically a momentum body closing above or below. And that is what will give us the intention or the information as to what decisions we should make in terms of buying or selling. The indication can also be seen as a break of a structure or probably a liquidity grab or liquidity deposit or liquidity distribution of that particular price or around that particular price. Um, where can we find precision support resistance? Where can we find it? So normally, like I said already, we can find it around key levels. It's better to view this from a top-down analysis perspective where you start from the higher time frame, mapping that, and then if you are framing a setup, then you can refine to the lower time frames. And then also, um, typically when the market is ranging or consolidating, the top levels of a ranging market is normally viewed as resistance, and the down levels is viewed as support. So when you map those two levels up and down in a ranging or consolidation market, that is a good environment for you to be able to identify a precision price or a place where price would do the breakout or take up off or distribute off from. Um, Also, when you have a swing structure, let's say there is a movement up and there is a quick shift of structure to the opposite direction. That creates a swing structure. Within that, you can also locate or find this precision price in terms of the support and resistance around that swing structure. And then also where price has impulsively been distributed from on the chart. So anywhere where you see price randomly hit and there is a very large disposition or displacement of price or momentum takes off, you can view that place as a precision support price. So um, around this precision support price, what should we be doing? What should we be looking for? We want to frame a buy or a sell setup. We want to look for rejections and engulfing pattern. Very, very, very important. Rejection and engulfing pattern is very, 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 very crucial. Very important. Let me highlight it. Okay. What you want to see is rejections and engulfing. What is rejection? Rejection is it's like if let's say you want to toast a girl as a boy and so you know what we mean by rejection. Great. So doesn't accept you, okay, or doesn't allow you or give you access or approve you. That is rejection. Let's say you apply for a job or you apply for graduate study or a program or something like that, bachelor study or something like that, and you are not chosen or you are not accepted, you are not approved. That is rejection. Okay, so rejection is important around precision support lines. And what is engulfing? Engulfing is when somebody swallows you or when something swallows you, when you are on top of everything and something decides to swallow you, decides to take over, take charge, take dominion over you. Okay, that is engulfing. I will show all this on the chart quickly, very shortly. And then also around precision support lines or prices, you have to look for BOS, break of structure, and also look for a swing range around that so that you can be able to have um, an accurate range that you are dealing with in terms of your setup. That can guide your stop loss area and also your TP. Also, within if the precision support resistance is within a discount or a premium zone, that is a very great, a very sweet spot where you can have a good entry for your trades. So these are the things you would want to see around when you frame your precision support resistance. So like I said, I've already explained engulfing and rejection. What is a valid high or a valid low in terms of price action? So a valid high, let's say if we are on let's say if we are on an uptrend, a valid high is a high that takes out a previous high. And a valid low is the low in an uptrend, the low of which price took off to take the previous high, and the vice versa. What is a valid low and a valid high in a downtrend? So if price is moving down and takes out a previous low, that low becomes a valid low or a reference low. What is the reference high for that downtrend? Where price started the move from that took out the previous low becomes your reference high or your valid high in that context. So anytime you see a break of structure, that break of structure becomes your swing range where you can frame your setups. And within this swing range, you can look for your discount and equilibrium and then premium in terms of where you are aiming to take your trades um, using the Fibonacci. So around or in swing lows and swing highs or reference highs and reference lows, what is there? Why does price create those spots on the chart? It's because price will want to either distribute liquidity to swing highs or swing lows, or price will want to price will want to distribute liquidity up to that place, or price will want to go and deposit liquidity there. Price will want to distribute liquidity off from that place, those points, reference highs, reference lows, swing highs, swing lows, they are technically the same. Or price will want to go and distribute, deposit liquidity or money, volume, price there. Great. Or price will want to move there and grab three things. Grab, okay? Distribute, deposit, grab. This is what happens at swing lows, swing highs, or reference lows and reference highs. So let's move quickly to the chart and see. So, what do we need in order to frame a setup using this concept that I have quickly mentioned or run through? One, we need to draw our PSR, precision support resistance. Two, we need to see indication. Three, we need to see corrective. Corrective. Four, we need to see rejections. Five, we need engulfing pattern or candles. Okay. Five, um, it's better around discount premium zones using the fib. Five. So if we are talking of discount premium, then it's also better framed within a dealing or swing structure. And then if we are talking of that, then the last thing is we need to see BOS or change of direction. So these are some of the basic things that we need. And sometimes too, it's an advantage to see chart patterns from a broader view. So that is like a head and shoulder, double tops, stroke bottoms, all flags, etc. Like for both continuation and reversal patterns. So head and a shoulder and double top, double bottoms are all um, reversal patterns. And then flags are more of continuation patterns. Great. So there are a lot: triangle, falling wedge, rising wedge, all of them. Yeah. So great. But the ones I like most is the head and the shoulder, and also um, yeah, I like the head and the shoulder very well. And then also I like to see the flags if I'm looking for continuation. Great. So these are some of the things that we want to see when we are using precision support resistance to frame our setup. So let's quickly go to the chart. I want to use um, step 100, step 100 to discuss this setup. So this is step 100 from 24 hours. So as we can see, step 100 itself, because the reef does not give the full data, on the derivative chart, if you look at MT5, you will see that price is a downtrend, a very large or big downtrend. So this high was price pushing up to retest this area. So there is already price action from above here coming down. There's price action from above here. So we are on a downtrend. But what do we see within what Deriv is giving us here right now? What do we see here? Okay, so we can see that we had an uptrend. We had an uptrend, high, low, higher high, lower high, higher high, lower high, and higher high up to here. Then this was an uptrend. Why? Because um we keep making we keep making lows, we keep making lows, low, lower high, lower high, lower high. We keep making higher high, higher high, higher high, highs. Okay, so a low, high, lower high, higher high, lower high, higher high, lower high, higher high. And then from here, what is the last lower high? So this is a typical bullish market. So how are we going to know that the trend is changing? Okay, the trend will change when the last lower high is taken off and price refuses to go back up to give us a new high. If we get a failure swing, if price refuses to give us a new high, then we can say, and then comes down like this, then we can say there is a change of direction. Okay, so let's see what is happening. So off this structure up to here, we can now observe or see that price drops down here, it goes up, drops down again, goes up to this point, or we don't have an external change of character or break of structure yet. We are having internal breaks or mini structural breaks, okay, structures within the range, the current range. But we don't have, so, but when price drops to here, then we get a change or a break of structure. And price goes up, but fails to go high. Okay, so from here it drops down. This was supposed to go high. Okay, this was supposed to go high because price takes out here. Okay, the last lower high that gave us the higher high. Price takes that out, and so it goes up, comes down. We're supposed to get a new high so that we will view this drop as a liquidity grab. Okay, so but it didn't do that. And partly it should be because that this pair is bearish. Okay, this pair is generally bearish. So price it just did this and then dropped to get us a new break of structure. Okay, so now we are bearish from here. After getting us that new break of structure, it's, oh my God, getting us the new break of structure, we go up, we come down, consolidate or range like this, we go up because we have not taken the last lower highs that broke the structure. This is the current dealing range or swing structure that we are dealing with here. Okay, so because we have not taken out this, still we are bearish. So what do we see? Price gives us Price give us a move to the downside. Okay, we get here, it moves back to the range, drops to here, comes here, drop here, come here, and we are currently where we are right now. So um, from up here, did we take a new low? Yes, we took that low into this area and then pulled back into here. So from here we have a new break of structure. This low is taken out, and therefore we have this new range. So what is our current range? Right now we are bearish. And what is the current range that we are dealing with? The range that we want to deal with or want to trade with is from up here to here. Okay. So only when price takes out this high is when we will say that we are technically seeing some kind of a change of a character. Okay. So from here, after this break of structure and this pullback up here, we have not seen a new low yet. So the expectation is right now is that it's either price will go up and take out this high and probably drop to give us a new low like this. This is the first guess or anticipation. Or is either price, as price has gone up like this, price will just sweep down to give us a new low. Okay. It's either this or the first one. So now that we've understood or we've looked at the trend or the structure based on the price action or the structures, the market structure, okay? Now that we've seen the direction, we are bearish, and we've seen the current range that we are dealing with. Now that we've been able to see that, let's go into the range we want to focus on specifically. This is that range from here to here. And two things, we are expecting two things. Either price goes up, test here or take here out, or price drops down and give us a new low. These are the two things that we are looking at right now inside this range. Good. So in this range, let's now move to the 8-hour time frame and see what is happening. So this is where I will now, because this is the range we are dealing with, this is the current range that we are dealing with, I would want to frame my support resistance. Okay, so what is the condition? We have a high here, a previous high here, a previous lower high here. At this point where the blue line is, that has broken structure and has given us a new low. So we have a range. So what do we do with that range? We can use our Fibonacci to measure that range, and then we will be, if we are looking for a sell bias or a bearish bias, then we would have to monitor, because this pair is bearish. So we have to monitor price inside of premium, which is premium is anything above 50%. So we have to monitor price inside of premium. So inside the premium, let me change this color to a blue. Good. So inside the blue area, which is premium, and I like to see what happens normally around 78.6%. 78.6%. So we have a swing structure or a swing range, okay? And we have a swing structure right now, and we have our reference reference high. In this bearish situation, we have this as a reference high, and we have here as a reference low or swing low. Okay, swing low, this place as swing low. So it's only when price takes out the reference high that we can, and constantly stays within. When it takes out that high, it's going to give us a new swing high or break of a structure, and this reference low. So we are going to have a new um a new range. So if price trades within this range and constantly stays inside the discount zone and does not drop to give us a new low, then we will say that we will be going bullish. Okay, because we have a break of structure. But if it takes that high out, reference high out, and still drops to defy the discount price and give us a new low, we are still bearish. Okay, it means that the break of a structure or the break of the reference high did not hold. Okay, and not price does that a lot. That we can call that as probably liquidity grab or something like that. Yeah. So let's get into it quick because of time. So we have a range that we are dealing with. We have a reference high, we have a reference low, we have our swing structure, and we are looking for to frame a sell setup around our around premium, because generally the pair is bearish. Good. So um this is the 8-hour time frame. So what should we expect, or what should we do? So let me use, so I have the blue line. I have the blue line up. Good. So let's mark, and we have our premium zone shaded. So let's mark our precision support resistance. So I have said that where price have been used as both support and resistance, or where price impulsively takes off from, that is the place where we can view as precision support. So where can we find that right now? So if I come down here, so let me start off like this. Okay, so look at this low here. Okay, off here, price hit here, we hit here, price hit here, and then buys. We hit here the second time, we go up. Okay, so 1, 2 hits of this place. Now, this area can be viewed as support. Why is it viewed as support? Let me take the premium price out, or let me make it a different color. Let me make it a different color, like yellow. Good. So why is this place viewed as support? It's viewed as support because there are buyers sitting here. The reason why we saw rejections here, or price gets here and goes up, is because buyers come in with volume, money here. Okay, so price hit, buyers are staying here. Okay, are present, they are constant here. But the question is, the edge here is that what will happen if the buyers, they have the volume of money that they are having, or if the buyers get weak? Okay, if the buyers get weak, the sellers will take control. That is the logic. Good. So at the same time buyers are sitting here, there are also sellers. Sellers below the buyers, waiting to take advantage when the buyers get weak. Okay. So um because this support, so this same support here can be seen or can be used as resistance. How is that? Is that it can be also used as a ceiling or resistance for a sell. For example, here, look at how price comes down, goes up to the same zone here, and then sells. Okay, look at how it does it. Look at how later price come back to this same area, breaks it, retests it, and then sells to this to the down here. Okay, so this same zone can be used as both support and resistance. It has been used, that zone, but the zone is too big for me. So I want something precise, and that's why I have framed this precision support. So we know buyers are here and sellers are waiting below them. That's what we know right now. We know that right now. So, how do we frame this precision support within this zones? Okay, this zone. We want to use a line to represent that. And we want to do that exactly at a point, exactly at the point where the candle, okay, so let's use the high edge, the high part of this where the candle um where the candle, okay, body of the candle has taken off, let's say for this buy here. Okay, price hit, reject, close above, took off from here and bought, hit, and then off above it, buys. So let me take this out. Let me even take the premium zone out for now, and let me color the blue line as, let me make it red and let me make it big. Good. So off this red line, you can see that momentum, we took off, bias, boom. Okay, see the candle, the body. The body is sitting on the red line. So let's observe the red line. Anytime price comes to the red line, hit, reject, hit, reject, hit, reject, but above it is where the big move happens. But let's see here. When price came down again to the red line, okay, we did not see any rejections. Rather, we saw consistent bearish closes. This is called indication. Okay, so we get close, even this candle hit through the red line and then came down and rejected to close above. But the next candle hit the red line, stayed on it, and constantly closed below the red line. The moment you see price closing body below the red line, that is what I called indication. I call that indication. So this is the intention that the market is giving to us, that it wants to sell, or sellers wants to take charge, or sellers have engulfed, overshadowed the buyers around here. So from this time here on, anytime we get a body close below this red line, there is a likelihood we will sell. Or anytime price consistently stays below the red line, it's likely we will sell. Okay. So now it makes this red line powerful right now. Okay. Very precise. Why? Because anytime price is above it, it buys. Anytime price is below it, it sells. So let's do a check quickly. Okay, so price closes below it. The next candle retest it, came down below it, and then boom, we got a sell, a move. Now price comes back to it, hit it, and then drop. And then we saw an engulfing candle. Okay, that is what we're saying. The conditions engulfing. You need to see an engulfing. Okay, engulfing below, it stays below it. We got a sell. Now, the moment price comes up and get a body close above it. Okay, look at the momentum. This is telling you that you have to, the buyers are in charge again. So you have to look for buys. And therefore, price goes up, comes down for corrective, retests, okay, constantly closes below here, which is a bearish indication, but it rejects and goes up and closes above it again. At this point, what it means is that it's saying that I want to buy, but after the buy, I want to sell. So now it gives the intention within this candle, and then it retests, reject, stays above, and buys to the upside. Okay, buys up to here. Good. So now let's continue watching. Price comes back to it again. Okay, goes up, engulfs body, okay, and closes below. The moment we see a close below the red line, we retest, boom, sell. So all you are looking for is indication, a body close below the red line, and then a retest, rejection, and constantly staying below the red line, you look for sells. If it happens for the bearish situation, a close above, rejections or retest on it, constantly staying above, you look for buys. Good. So that is it. Now price comes back again with a big momentum, bullish momentum, closing above the red line. Now price goes up, retest it, another close above the red line, and then it buys up. It buys to the upside. Now buys up to here. We see a rejection from the premium zone here. Price drops, engulfing. Okay, see the bearish engulfing. I like this. This is very sweet. Engulfing candle that closes below the red line. Okay, closes below the red line, and then we see price goes up above and also closes above the red line, bullish candle. This pattern here is telling us that I want to I want to sell, but after the sell, I want to buy. Okay, this is what it's telling us. I want to sell, but after the sell, I want to buy, which means that as long as price constantly stays below the red line, is going to be sells. And as long as price constantly stays above the red line, is going to be buys. Okay, so that is what it's telling us right now. So now let's go back into what is happening in the premium zone. So price comes up, and then if we take our range again, price comes up. Now we have gotten our precision support resistance line. Okay, and we want to be buying above it and want to be selling above it. So now price comes up, we have a break of structure, a swing range. Price retraces or pulls back, corrective back into premium, which is a very sweet spot, 78.6% or probably 88. Rejects. Price gives us a break of structure. After hitting the premium zone, we get a break. This is the last low here. This place, the last swing lows that gave us these highs. So price drops from there and then breaks structure. I will see this well when I go to the 4 hour. Let me go to the 4 hour right now. Perfect. So this is the last low that gave us this high. Price drops and gives us, we even have an internal low here. Good. So if I want to look at it this way, we have high, low, higher high, lower high, equal highs, lower high, higher high, lower high, higher high. So at what point are we going to say there is a break of structure? If the last lower high is taken off, is it taken off? We get a hit here, it did not take it out. A failure swing drops down here, boom, to take it out. What did it take out? It took the last lower high that gave us the all-time high or the higher high. It took it out. So this is the pattern. This is the pattern, and we take this out. This is the break of structure. We have a break of structure here. When we get a break of structure, what do we expect? We expect a retracement or a pullback. Impulsive, we have corrective. But the break of structure happened into going below the red line, which is our precision support. And that is where we want to be looking for sells. Okay, so price gets us into premium, then it gives us a BOS, break of structure, into the precision support resistance, and it stays below, okay, goes below it. This is the indication, break of structure, and is below precision support resistance. What do we wait for? Wait for pullback retracement. Okay, so if we have such a situation, we pick our fib, measure up to where the break of structure happened, which is a little below the blue line, red line here. And what is the pullback? The pullback got us into okay, probably, yeah. So price drops here and got us into 38.2%. Yes, good. So it's 38.2%. Um, it didn't even get to equilibrium here, and price sold. Okay, giving us a proper indication that we want to sell below the red line, precision support resistance, and at the same time we hit the premium zone and have given us a change of character or a break of structure. So with these two conditions met, we will only be looking for pullbacks, and then we can join the sell. Good. So now price givers, but with this break of structure, where do we look for price? Okay, where do we look for price? We look for price anything above 50%. Okay, anything above 50%. Anything above 50%. Okay, anything above 50%. So has price got us into 50%? Yes, we've been able to get into um 61.8%. Okay, we are not at 78.6% yet, but we are at 61.6%. So that is a sweet spot. We have been into premium. Okay, we are in premium. So this is a sweet spot to get a sell. Now, price hit premium. What do we see around here? What do we see? So the condition now is that we have got a pullback into premium, but and we have also had indication to sell below the red line, which is precision support resistance. So now, what do we do? Perfect. Great. So what do we do? Now, price inside this yellow shaded area here, price has given us on this 4-hour time frame. Let's see the structure. So we have higher high, lower high, higher high, lower high, higher high, lower high, high. And so what is the last lower high? Price drops to take the last lower high out. Okay, so we expect price to go up. Okay, okay, so that this would be like a sweep of liquidity, but it goes up and fails, and then drops to give us a second break of structure. Okay, drop to give us a second break of structure. So now this pattern here, this pattern here is a change of direction. Okay, we've changed direction. Break, pullback, second break. Okay, so everything is telling us that we should be looking for sales. Okay, but where do we look for the sales? One, we only look for the sales below the red line. Okay, because in the past, according to the precision support resistance theory, as long as we are above it, it will buy. As long as we are below it, it will sell. And we are seeing an indication through a break of structure. Okay, price action is telling us that this is getting us into a bearish pattern. Okay, but we also constantly see a bearish engulfing candles. Okay, that constantly closing below. So this is telling us that we should be looking for sells. So two setups here right now. Um, Still this place above here is still above here is still the premium zone. Okay, so price can still trade up into the premium zone, no problem, because we hit 61.8%. We still have the 78.6%. We still have the okay, I think price even, yeah. So we got the 78.6%. That's a very sweet spot. This is where we could even have taken our entry. So let me put another red line here. Perfect. Yeah, this is a sweet spot. Price hits 78.6%. If you extend the measurement to the low that it gave us here. But initially, I just measured it up to here. I just measured it up to here. Good. So we've hit 78.6%. And then we get a break of structure, we get a bearish pattern here, and then we are retesting equilibrium 50% again. Yeah, so at equilibrium, equilibrium is mostly indecision. Okay, so price can go up from the equilibrium if we get a close above the red line and the 50% price can go up back into the premium zone before it sells. Okay, and then at the same time, price can also stay below the 50% and give us a sell. So two areas where we can have our entry right now. We can have our entry, we can wait for an entry here, which price it likely might not give us, or it could take a longer time to give us. We can frame a sell entry here, okay, at the 78.6%, like on a rate test of this area, okay. Two, we can also get our sell exactly as price is below the, and then the high is just this week, the stop loss is just this week's, because if we get a body close above the red line or the 50%, price is going to go up. Okay, so as prices, and we have to observe, because in the PPT I had said that we need to see rejections and we need to see engulfing. Okay, we need to see rejection, we need to see engulfing. So are we seeing rejections right now? Are we seeing rejections here? Yes. We see a doji rejection. The next candle engulfs the doji, the low bearish engulfing the next candle, 4 hour candle, go up, hit the red. So see how constantly price is hitting the red line, which is the magic precision support resistance. Let me even make it blue and let me make it big. Good. Price is hitting it constantly and price is rejecting. Okay. So what we need right now is we need price to give us a full engulfing. We need a 4 hour candle that will close below here. If a 4 hour candle closes and takes out this area, this low, why am I using this internal place? Because off here, this area, price have bought into this area and price have sold from this area. So this point is that line or point, okay? And above this red line that I just put here, there is a bullish candle that took off to the upside. Okay, so below, so the concept here is that I want to go to maybe 30 minutes or 1 hour to explain this, but let me do this here. The concept is that there are buyers sitting here. Buyers are sitting here. That's why we got this impulsive body move, this distribution from off from here. And also prior to that, this candle here. is a momentum candle that closed above this red line I just drew. Okay, this red line I just drew. So one, price, this is an engulfing pattern, or you see consistent close of bearish candles that broke structure. Okay, what structure did it broke? It took out these lows. Okay, took out these lows. You see how price hitting the red line and going up. Now this bearish move comes and engulfs and breaks all that. Retested, drops down. Okay, and then now it gives us a close above it. Okay, so what we need right now is a bearish close below the buyers that are here. Buyers are sitting here. Okay, but below them, sellers will take charge. So we need a body close, a bearish body close below the buyers. And that will be our sure security that this trade is going to play very well internally. If we get an entry here, so this is the first entry. So TP1 is here, is the red line. Because if we don't close below it, it's likely price will go up again. And what is TP2? TP1 is just here. TP1 is here if we are taking the entry from up here. If we are taking the entry from here, TP1 is here, is the red line. What is TP2? If we get a body close below here, TP2 is just here. Okay, where price got to before the pullback. That is our TP2. So let me put a line there. Let me put a line there. This is too big. Let me put a yellow line. Probably not yellow, maybe red. Good. This is TP2. But if this move is going to give us a very big or sweet move, the intention or the idea is that we want to see a new low being given. We want to see a new low. So if this bearish move is going to hold, then, but for now, we can aim for TP1, TP2. And then if it closes below this red line also, probably we can hold the trade till it give us a new low for the bearish pattern or structure to be complete. Perfect. So this is the 4 hour once again. Let me go to 1 hour or 30 minutes to see what is happening. So let me take this off. We know the red line is TP1 already. We know this red line is TP2. Our entry is where the rejection is happening. And a better sell is going to be when we get a close below the TP1. Okay, so and these are all internal precision support lines that I'm drawing. Okay, because off above this red line, price has bought. Above it, price has bought. So it means that if buyers do not take the price up from there and it closes below, body close below it, or indication happens below it, sellers are going to take control. That is the edge. Okay, this is support, buys, but below the support, we want to see sales. Okay, so that is the logic. That is the logic. Good. So now we have three. We have one. The first entry is below the blue line, which is our main precision resistance. And then the second entry or a more sell entry is when price goes up into the premium zone again, which is up here. Okay, that is where we're going to take a second entry. If price closes above the blue line, which means stop loss is hit for this trade, that is perfectly fine. Then we will wait and see what will happen at the premium zone again. Okay, so now let me go to the 30 minutes and see what is happening on 30 minutes from 4 hour. Good. So this is the 30 minutes on 4 hour. This is the 30 minutes on 4 hour. This is a live market, right? On the 30 minutes on 4 hour, we are below the blue line, precision support resistance line. Are we seeing any break of structure on the 30 minutes? Are we seeing any engulfing? Are we seeing any rejections? One, this bullish candle and this bullish candle here. These two bullish candle are momentum indications. They are telling us that price wants to buy. So the close of this bullish candle above the blue line is telling us that price wants to buy above the blue line on the 30 minute. That is why that place is our stop loss. So if price is to close body above the blue line and takes that high out, we are not going to hold this trade. We are going to accept loss. But after it told us that it wants to buy, now we see an engulfing candle that brings price below. So let's do some price action work here. Now let's see. We are here on this 30 minutes. We are on 30 minutes right now. So from here, we have a high, a low, high, a low, and a high. At what point are we going to say that price is changing character? It's when the last high is taken out. We see this. Then we see a push up. We see this. And we see this. And we see this. Okay? And price is currently here. This is the pattern we are seeing right now. Sorry. This is the pattern we are seeing right now. In this pattern that we are seeing right now, we were bullish, but at the last lower high, we take this last lower high out. Price drops, go up. Once we break structure, we look for what? We look for anything above 50%. Price drop, go to 50%. Second break of structure, go to 50%. Go to 61.8%. Okay. And if I extend this to the second break of structure, it's close to 78.8%, which is a sweet spot to sell. Okay. So one, is price going to go up again here to retest? I can't tell that. But what I know right now is that price has given us a break of structure or a change of direction and a second change of direction. And we've seen the pullbacks. Okay. So now what we need right now is this high should not be taken out. That is number one. Okay. So this internal highs can be taken out, but this high should not be taken out. And if that is to happen, then we are going to see the sell, a bigger move. Okay. So two things, either it will push up, not take this high out and then sell, or it will just sell from off somewhere here where it is like that. Okay. So these are the options. Good. So we need to keep monitoring. Okay. But our goal is that as long as we are below the blue line, we are looking for sales. I say, okay, we are looking for sales. So this is also a bearish indication or pattern, break of structure below the red line, the blue line. So everything shows that we should be able to take an entry here and hit the red line, TP1, and probably drive price to TP2. Everything shows here. Okay. So we missed the entry. I missed the entry because we should have entered this trade right at the blue line. We should have entered this trade there. So let's see if anything will happen and price will come back to retest this area. It's likely that will happen. So let's see, and then we can sell to here. You can sell to here. So this is how we catch it. I will give an update on this setup. I'll give an update on this setup, but this is how we do it. So in this tutorial or discussion, I have observed, I've used the concept of precision support resistance alongside with price action itself, combining with it with premium discount zones and to frame the setup. Okay, so if you want to use this concept, I know it's a little bit complex, but I keep researching and backtesting and refining it so that it will become very simple. Okay, and I hope that will be possible so that we all, everyone can easily look at the chart and see these things happening and apply them. So let me mention them again. To use the precision support and resistance concept or theory, one, you have to draw the precision support resistance line within your normal support resistance zone. Two, you have to see indication. Three, you have to see corrective or pullback or retracement or retest. Four, you have to see rejections. Five, you have to see engulfing patterns. Five, it is better that you see or you have a dealing or swing structure. Five, you need to see break of structure or change of character around where the precision support resistance line is. Is better around a discount or a premium zone where you get you see you frame that setup. Also, it is advantageous to see chart patterns like um, head and shoulder pattern or double tops or probably a flag around where you are framing that setup. Okay, so now the last thing we want to do is we want to check and see, does this pattern at all looks like, does this pattern looks like, uh, does it look like any pattern like that? Does this look like any pattern? So what I can see it, I see I see this as price bought and price sold to take this low out. So from this high to here, I can see this as a bearish flag, which means we are likely to have this, okay, likely to have this. Then I can also see this move that is going up as a rising wedge. Okay, price moving sideways in a triangular form or in a channel. Okay, so I can see this as rising, 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 and it's consolidating sideways. So it's giving us an idea that it will get to a point where price will now sweep to the downside, price will sell. Okay, so I think these are the patterns that I see. What pattern else do I see? So um, I can also see if I take this, this looks like a left shoulder, a neck, a head, breaking the neckline of the left shoulder, making us a right shoulder, breaking the neck again, okay, breaking the neck again and pulling back up. So I see this as a, so all this place is the right shoulder that is has formed. Okay, so this is a head and a shoulder which is used for reversals. So price has been buying, and this is created to give us a reversal for the sell continuation, bearish continuation. So this head and a shoulder can also help price to sell. Um, yeah, this is a head and a shoulder pattern. Uh, okay, yeah. So just here is a head and a shoulder pattern. I can also see this 30 minutes, but let me see. I can also view here as um can also view this place as a head, sorry, left shoulder, neckline, head. We break the neckline, we form a right shoulder, and so the expectation is for price to come to the trend line here. Okay, so this is also a perfect head and a shoulder pattern if I view it from this angle. Okay, so this will help us to sell. Okay, this pattern will help us to sell. We break the neckline, which is the support. Exactly. That's why I said TP1 is that place. So if we close it below that place, we are going to have more sales. Everything is aligning up. Exactly. Okay, great. So this is it. Head, left shoulder, head, neckline break, right shoulder formed, and within the right shoulder, it's forming another head and a shoulder also there. So let's see how this trade will play as long as it stays below the blue line, which is the precision support resistance, um, and which and as price had reacted of premium zone with a bearish pattern or break of structure or movement within this head and the shoulder pattern, let's see what price will give us. So I'm going to go ahead and draw just a line here to connect this. Draw a line to connect these places and take the head and the shoulder off. Good. And how can I clean the chart to some extent? Let me take these things off. Let me take here off. Let me take this line off. We are likely to have price pull up into here before it sells. So let's see it this way. Good. So this is 30 minutes. Um, let's see how it's going to go. Even if it doesn't retest the blue line again, which I believe it should retest. If it doesn't retest the blue line again and it drops straight forward into the TP1, we can still find sales because we know that the setup is going to play out. Okay. The only problem is that it will make our stop loss very wide. Okay. That's why an early entry or a precise entry is important. Okay. This is how I do it. I analyze the market. If you find utility or importance in this discussion or ideas and you want to learn more, you want to understand how I analyze the market, just comment below. Get in touch with me, and then I'm happy to analyze with you. I'm happy to discuss with you. I go back to 1 hour. Yeah, perfect. So on 1 hour, yeah, we see an engulfing, we see the next candle, we see this current 1 hour candle. Is it going to engulf? I don't know, but it's in the process of engulfing again. But we are likely to have price. Maybe price will want to hit TP1 and then retrace back up, and then drop. Maybe. We can't tell until it happens, until price gives us the candles, then we can determine. But from what we are seeing on 1 hour right now, it looks as if we will be getting a bearish pattern. So it's an early entry, or it's an early framing right now, because um off from this place, price has been bullish, and we are now trying to um um disregard or discredit these bullish people. Okay, so until we close below these people, this place, we have not discredited them yet. But the good thing is we are below the main magic support or precision support line, which is a good thing. Okay, so thanks so much, guys. And so I'll keep monitoring this trade, and I'm going to personally enter this trade, but I probably will have to, I want to see how this 1 hour candle will close. How many minutes do I have for this 1 hour candle to close? How many minutes? So this is 10:31 in the morning, my time. So, which means a new 30-minute candle has opened. Let me go to 30 minutes. Good. A new 30 minute, the 30 minutes candle close, a new one has opened. So we are very likely, if this new 30 minutes candle pushes down, it's going to give TP1 easily. But at TP1, probably price might now go up and retest the blue line once more time and then drop, or it might not. Okay, two things. It's either it will or it will not. Okay. Thank you so much, guys. Let's see how it's going to play out. Um, yeah, so I think this video has become very long, so I'm going to stop it here, and probably I will take a new pair and analyze that pair using the same concept. Analyze the pair using